Okay, I want to do something a bit different today. This is a DM I got from one of our Discord members. I'm hiding their username. I don't want anyone afraid to DM me because I'm gonna like make an example of them. I've hidden his username. I've also asked permission. Okay, I don't want to be bullying anyone. And in fact, these are the type of DMs I love. Okay, so this user said on ticker CMG, I wanted to verify if I was seeing a possible breakout on the 1 minute scale. Ripster Cloud indicates movement, an ATR of zero point zero 0.08 and an RSI of 5 at 65. It's moved past its previous resistance at 45.6 to 45.77. Is that enough movement to indicate a reversal or anything? Still studying the indicators and ensuring I can interpret the information accurately. And then he also sent me a photo of the 1 day chart for CMG. So this is someone who's learning the tools that we use, that we teach at MBT, but they're at this point, because he's newer, he's kind of like a monkey with a chainsaw at a body shop. He sees the tool and he's just hacking out whatever he can with it, which is fine, which is actually amazing to see. I see that and I'm like, this isn't the right implementation, but it is the solid foot. This is the solid effort. This is good. You're putting them on, you're trying to learn and interpret them, you're asking specific questions. Fantastic. We can build off of this. This is the type of mentorship I love to lead with. If you guys are looking for an example of what a good question is, what is something we can truly build on that isn't open ended and ambiguous, this is a great start. So let's kind of break this down a little bit more on CMG. Um, First thing that we want to be aware of when we look at a stock like this is, okay, we just had a massive gap down. So he mentioned that RVOL was increased. And we really want to start at the more broader picture, right? And then from that broader picture, we kind of want to start setting out some key levels here. Key levels are points of resistance. As many of you know, if you are big subscribers, we're our subscribers to the YouTube channel, or really any of my applications where we kind of break this stuff down. The first thing we want to do is just kind of find these spots here where price has a significant memory with multiple touches and has a significantly measured move from those points of resistance, right? So these are just wicks through this. I wouldn't call this a area of importance here, and rather, being unable to break to this level just simply brought it right back up. That's only 1 day, a little bit of whipsaw action, but this turned into a resistance, then later became a support that then drove the move higher. We then confirmed this prior key level here on the revisit to this lane. So we've actually, following this pullback after a poor earnings, the sell-off brought us to an oversold level, right? So we're just getting a mapping of the lay of the land here, right? And we've now come back into this key chop zone where we have these clear key levels here. And actually, we probably should see if we can find one below. Looks like this is your bigger resistance. We have a failed breakout here that came back. And then once we got the confirmation, we then created that next key level here. So truly what you're looking for a trade on a short-term time frame is you probably want to see a break of this key level, because you've seen us just kind of chop in this range here. So when we're talking about a breakout, as he indicated, it's important that we first start with like a lay of the land. So then we can come back on like a shorter time frame, say the 65 minute, and see if there's any smaller key levels that seem to be important areas of interest where we can then set maybe some smaller levels. Now, since we have the significant gap down that brought us to this kind of no man's land with only a little bit of data, for us to really come off of for the 1 day. Now, given we could maybe likely not even on the monthly here, there's not much there, but we could have gone to a higher time frame to the daily and gotten the lay of land there and see if that would provided more data points for us to kind of calibrate our surroundings on. But there wasn't much there. So now we can kind of piece together here. Now, the first thing he mentioned here was the ATR. So I just totally lost that chart because I misclicked. There we go. We found our way back. Now he also mentioned the ATR. So the ATR is going to tell us the average range of the day. And it looks like this one isn't even calibrating correctly from here. But we can still look at this, that the average range is $1.31. And on the day, we moved outside that range by about 54 cents. Okay, the day range was $1.89. Which was 143% of the true average range, which is the typical movement of the stock. That all that tells us is that the likelihood we continue to clear through these ATRs is increased. The volatility is higher. It is getting more movement than necessary. So if we had seen a stronger push through this upper level, which by the way, there's a pretty good setup here if we look at the resistance through the pre-market here, the pre-market structures, which is a big thing that we study. So you can see here where we became, actually, this might be a little bit cleaner if I actually just use some arrows here to really describe this, but you can see we have, let me turn the magnet off here. If we have this resistance here that was formed, looks like it was tested again there. Well, rather, this is support. Sorry. This is support that then became resistance in the morning, was then tested during the day. If you get this major key level, and remember, this is a major key level that we set on the daily time frame that is still obeying these rules on the 1 minute. So if you're on the 1 minute, you might just think, oh, this is just, you know, ambiguous support and resistance. But this is actually a major key level, and getting the lay of the land and then coming down to the shorter time frame reveals how key that level is and how significant a breakup there of that would be had we seen it. So when he's asking about was there a breakout here, this is the breakout that you would truly want to look for. The ATR is really not going to be significant to us, other than maybe to indicate that we want to keep an eye on this. The RVL here also isn't going to be very significant to us, given the fact that we just had a major event. And so we can see that there's an increased amount of activity here into the pre-market, but we can see it pretty rapidly die down into the close. And we also really set a range in the morning, and then we didn't really break out of that range. Denied on the bottom on the attempts to get below that open range, and denied on the top as well. So we would wait for a day 2 move here to see, okay, can we break through the bottom here? Maybe if we tomorrow we see this kind of trade sideways and then it makes an attempt at the low, as we come to that, as we break under that previous day's low, that might be a moment where you might look for an opportunity to get into the trade. If maybe something that was, if that was paired with maybe something like the relative volume picking back up again, telling you that more participants are joining into the selling, which might increase the likelihood that this continues to follow through the major key level. And then maybe you'll get a move from that 44.50 to the 42.95, right? So that's what you would look for as well. Then we have a comment here about the Ripster Cloud. So Ripster Cloud, typically when I'm using these are kind of like bumpers when you're bowling. These are kind of like my bumpers when I'm trading, and I want to make sure that I'm kind of sticking with my bumpers. That's actually not a good analogy at all. Let me try and think of something better. My bumpers are like the lanes of my highway. So anytime I'm getting really far off the track, or the stock is getting really far off the track, I want to see, when we're getting deeply oversold like this. You see, we get the nice revisit to the bearish EMA. Market kind of checks in, says, hey, can we break through this now? No. And then we continue to our regular path to the selling. We then get multiple attempts to break out of here, and then we revisit back in where you meet major resistance. That's kind of what I think of like Ripster EMAs as. They're not really going to be a major indication to me of a huge change in sentiment on the 1 hour time, on the 1 minute time frame. But if we go out to the 1 hour time frame, that's where you can start to develop a better idea of what those guardrails look like, right? So, you know, we can see that here we never even broke out of our bearish EMA on the Ripster EMAs, right? If I was short here, if I was short on a swing position, we're below the bearish, we faked out in the pre-market, came right back under it, faked out in the pre-market, came right back under it in the open market, still under it. I stay short, do that earnings next day. I'm even more short here. Maybe I even size up because of how bearish we still are. We're oversold, but it's not bouncing out of this Ripster EMA. We can actually see that was the case. Yeah, we broke. So that big candle there that tried to bounce, stayed under the Ripster EMAs. That's the way I use these, to stick with the trade, to stick with the trend. And then maybe if we break out the trend, I kind of use it as like a pseudo trailing stop, because it's more flexible than a stringent stop or a percentage stop. It's going to be more malleable, and that makes it have more utility when you're trying to be flexible and stick with the trends. That's the way that I use the Ripster EMAs. RSI 5 moves past its previous resistance at 45.60 to 45.77. I'm trying to see exactly where. So is this a breakout here on the shorter time frame? Here into the close? Is that what his question is? Oh, I'm seeing he's calling the 1 minute chart the 1 day chart. So for all the new people watching this is called the 1 minute chart. It happened in 1 day, right? But that's because each candle is 1 minute. Okay, so if we're on the daily chart, it's showing you a full year, but it's called the daily chart because each candle is 1 day. For brand new people, that's really confusing to them, but that's why it's called that. So if you send me a 1 minute chart and you say the 1 day chart, I know what you're saying, that this is 1 day, but to me, I get instantly, like my brain skips a beat trying to figure out what I'm looking at. So yeah, I think my explanation here corrects what he was seeing, and I hope everyone learned like some of the basics here of how do we take the indicators that Josh uses and kind of piece the puzzle together. And there's endless nuances and complexities on top of that. So come and hang out in the Discord and the live stream, and we can help with that. Hope you found this helpful. God bless, guys. Hope you make some money. Talk to you soon.